charts, but let me also welcome on board Arul Selvan, the CFO at Cholamandalam Investment and Finance, joining in on the show right now. Arun, good to be speaking with you. As per your guidance, your vehicle finance target disbursement growth was 15%, but we did see a decline in that segment. What are your strategies to achieve the target, and can we expect any changes in that?
The market had been very low in the first quarter, and our target primarily we always try to look at AUM growth rather than independently disbursement growth, because that's what results in the interest income. So if you look at it, we have we have achieved a disbursement growth of around 7% in vehicle finance, and the AUM growth had been around 18%. So we are well within the target, and compared to peers in the current quarter, our performance on both disbursement and AUM had been fairly reasonably good.
Mr. Selvan, since we're talking about segmental performance, in your home loan segment, your asset under management have grown 33% year on year, despite a slight decline in disbursements that we've seen. Now, with the management guiding for 30% AUM growth and only 15% AUM growth in FY26, could you elaborate on the key factors in terms of what is at play here in terms of these growth numbers?
So as you can see, the AUM growth has been fairly robust, and the disbursement growth in this segment had been lower or moderate, because in certain geographies where we are having a larger presence, like Karnataka, etc., there are some registration process changes that has happened in the home loan home buying mechanism. That has resulted in the slower disbursements in these geographies, and that is why you are seeing a flattish disbursement growth. We are confident that this would come up in the coming quarters, and for the full year, we will continue to we continue to maintain the same target levels.
Right. So this, given this 24% year-on-year growth in your total AUMs, which is already at the upper end of your earlier guidance, that of 20 to 25%, can you share with us your revised outlook or guidance for AUM growth and what the key drivers to support that trajectory would be?
So we still maintain the target for the full year in between the 20 to 25% level of AUM growth. The post of monsoons, we will see the growth picking up most probably in the Q3, Q4, when the festival season also starts coming in the vehicle finance business as well as in the home loan business. So this target we are not changing currently. We will stick to this target right now, unless there is a large implications of monsoons being not as per projections.
Sure. Mr. Selvan, if you could throw some light on the company's borrowing plans for the remaining 3 quarters of this financial year.
Yeah, borrowing is a continuous effort, because we need to keep borrowing to repay our existing loans as well as for fueling the new development with regard to the disbursements and the AUM growth. Approximately, we borrow anywhere between 7 to 10,000 crores every month, so that plan will continue. We have taken additional resolutions to enhance our borrowings in the coming year. You would have seen that. So we will do these borrowings. We are looking at various avenues of borrowing in the year, like ECBs, the CPs, as well as NCDs, apart from our regular mainstay borrowing of bank borrowings.
Right. Mr. Selvan, what about your gold loan business? How's that been performing, considering it's the newest addition to your bouquet?
Yeah, we just started. We have end of June we had around 75 branches, and then now we will be scaling it up to 120 branches by Q2. And it is a very early stage, but it is a business where we are confident that because the asset is secured and it's an appreciating asset, and with the new guidelines from RBI, there is a level playing field among players. So we are confident that we can scale up this business as we move into the future years.
Okay, Mr. Selvan, thank you for your time and also throwing some light on what's the outlook ahead in terms of the company's business for the remaining quarters of FY26.